What if you could collect paychecks every month without working a single hour? While most people grind 40 hours a week, smart investors build dividend machines that pay them while they sleep. They're not day trading. They're not gambling on crypto. They're collecting real cash from America's most profitable companies. Today, I'm revealing 6 dividend stocks that could eventually replace your salary. Real companies paying real cash to shareholders who understand the game. Here's something most people never realize about wealth. The rich don't work for money, money works for them. While you're trading hours for dollars, they're collecting quarterly paychecks from companies they own pieces of. As Warren Buffett just said, if you don't find a way to make money while you sleep, you will work until you die. But here's what Buffett doesn't tell you. You don't need millions to start. You need the right stocks, the right strategy, and the patience to let compound interest work its magic. Today, I'm sharing 6 dividend stocks that could change your financial future. Companies so stable, so profitable, they've been paying shareholders for decades through recessions, market crashes, and economic chaos. The thing about investing is that not all dividend stocks are the same. Some are wealth builders. Others are wealth destroyers disguised as income investments. The key is finding companies with 3 critical characteristics. First, they operate businesses that will be needed 20 years from now. Second, they have pricing power to raise prices with inflation. Third, they have a track record of increasing dividends consistently. If you put all that together in one company, you've got something solid. And usually those same companies are pieces of America's most reliable profit machines. Companies that have survived world wars, financial crises, and technological revolutions while still paying their shareholders. So let's dive into the 6 dividend stocks that could replace your salary. Stock number 1, Johnson & Johnson. This healthcare giant has been paying dividends for over 60 years. They currently yield 3.1%, which means every $10,000 invested generates $310 annually. But don't think of Johnson & Johnson as just Band-Aids and baby shampoo. They're a pharmaceutical powerhouse with blockbuster drugs generating billions in revenue. Their prescription drug division alone brought in $54.1 billion last year. They have this recession-proof business model. People need medicine whether the economy is booming or crashing. They've increased their dividend for 61 consecutive years, earning them Dividend King status. And that's because even during the 2008 financial crisis, while banks were collapsing and tech stocks were imploding, J&J continued paying and raising their dividend. They understand that healthcare demand doesn't disappear during tough times. With a payout ratio of just 46%, they're only paying out less than half their earnings as dividends. That leaves plenty of room for future increases. Stock number 2, Procter Gamble. P&G is the king of consumer staples. They own brands you use every day: Tide, Crest, Gillette, Pampers. Currently yielding 2.4%, they've raised their dividend for 67 straight years. Kind of like Johnson & Johnson, P&G sell necessities, not luxuries. You might delay buying a new car during a recession, but you're still going to brush your teeth and wash your clothes, right? Also, they are worldwide. P&G products are sold in over 180 countries, giving them currency diversification and exposure to emerging markets where consumption is growing rapidly. Warren Buffett calls companies like P&G economic castles with wide moats. Once consumers develop brand loyalty to Tide or Crest, they rarely switch. That pricing power is gold in an inflationary environment. Stock number 3, Coca-Cola. The ultimate dividend stock. Coca-Cola has increased its dividend for 61 consecutive years and currently yields 3.2%. And yes, this bubbly black liquid is delicious. But Coca-Cola isn't just about soda anymore. They own over 500 brands including Dasani Water, Powerade, and Minute Maid. They sell 1.9 billion servings of their products daily across the globe. Of course, having an incredible distribution network plays a big role in reaching that number. They can get their products to remote villages in Africa and skyscrapers in Manhattan with equal efficiency. That global infrastructure took over a century to build and is virtually impossible to replicate. Berkshire Hathaway has owned Coca-Cola stock since 1988. Buffett's original investment is now worth over 20 times what he paid, and the annual dividends alone exceed his initial investment. That's the power of buying quality companies and holding forever. But if you think Coca-Cola is the ultimate dividend stock, wait until you see what Microsoft is quietly doing for shareholders. Stock number 4, JPMorgan Chase. America's largest bank by assets, JPMorgan yields 2.9% and has $3.7 trillion in assets under management. Banking might seem risky after 2008, but JPMorgan is different. They're the bank that bought Bear Stearns and Washington Mutual during the crisis, growing stronger while competitors failed. Recently, CEO Jamie Dimon has built JPMorgan into a fortress. They hold $495 billion in cash and have passed every stress test since 2009. The current high interest rate environment is actually boosting JPMorgan's profits. They're earning more on loans while paying relatively little on deposits. Their net interest income has grown for 8 consecutive quarters. Stock number 5, Microsoft. Yes, the tech giant pays dividends, currently yielding 0.7%, which sounds low until you realize they've increased it for 21 straight years. Microsoft generates over $200 billion in annual revenue, with profit margins exceeding 40%. Their cloud business, Azure, is growing 25% annually, and their Office 365 subscriptions create predictable recurring revenue. The thing about Microsoft is that it's everywhere. It's basically the most widely used operating system software in the world, even more than your fancy Mac. And although sometimes it's not by choice but by availability, that definitely works in its favor. Once businesses adopt Microsoft's ecosystem, Windows, Office, Azure, switching costs are enormous. They're essentially collecting a technology tax from corporate America. Stock number 6, Kraft Heinz. With a 4.6% yield, it's one of the higher-paying names on this list. You know the brands: Heinz Ketchup, Oscar Mayer, Planters, Philadelphia. Pantry staples people buy in good times and bad. Even Warren Buffett admits Kraft Heinz wasn't his best bet, but Berkshire still holds a massive stake. Why? Because these brands never go out of style. With $26 billion in revenue and products in every grocery store in America, Kraft Heinz remains a steady dividend payer investors rely on. But wait a minute, we're missing something. That's right. Welcome back to the Muchafy Bonus moment, where we share the most powerful insight you won't hear anywhere else. We know you want to build wealth, one that lasts for generations. So, obviously, the goal isn't to get rich quick. It's to build an income stream that outlasts you. John D. Rockefeller once said, "I would rather earn 1% off 100 people's efforts than 100% of my own efforts." So dividend stocks are your piece of other people's efforts. Every quarter, thousands of employees at Johnson & Johnson, Coca-Cola, and Microsoft work to generate profits. And as a shareholder, you get your cut. The wealthy don't chase the next hot stock. They buy pieces of boring, profitable businesses and collect dividends for decades. They understand that compound interest is the 8th wonder of the world, but only if you give it time to work. A lot of people watch videos like this and never take the next step, but I'm betting you want more than that. If you're ready to grow your dividend income and build real financial security, hit subscribe and turn on notifications. And comment which stock you'd trust to pay your future salary. Remember, creating lasting wealth comes from steady, smart choices, not luck. Your future self is counting on the choices you make today. Start now, and let dividends replace your paycheck forever. Remember, simplify money, Muchafy wealth, one sketch at a time.